Hi there. Hope you're having a great day. I am Mamunur Rashid, a finance professional from Bangladesh. In this video, I will demonstrate a bookkeeping project. So let's look at our client's background. Janet Baker and David Hudson, two friends starting a new trading business to sell scented herbal handmade soap. Janet will be sourcing the products, and David will bring in the marketing strategies to sell them. On October 1st, 2024, they formed a partnership business entity named JD Handmade Essential. Once the business entity is formed, it opens a bank account at ABC Bank. Janet deposits 5,000 and David deposits 10,000 USD. With 15,000 USD as capital investment, JD Handmade Essentials kicks off. To manage such a business, we will need to oversee our finances, where our money is coming from, where it is being spent, what we are selling and purchasing, and what we are left with at the end of the month. For all of that, we need a bookkeeper. So let's hire one for 300 USD per month. To efficiently manage all these at the same place, we need one integrated software. The partners decided to go with QuickBooks Online and bought 6 months subscription for 200 USD, which will enable us to manage bookkeeping, stocks, sales, purchases, assets, all at the same place. Janet and David need two laptops to manage their daily tasks. Let's buy two for 2000 USD, and they assume these will serve the company for 3 years. So, useful life is 3 years for each laptop. We need a place to work and store our products. Let's rent out Janet Baker and her husband Howard Baker's garage for 6 months for 300 USD per month as a rent. Definitely, they have to share the utility bills. So, Howard Baker, when he raises an invoice for rent, he will be adding in the share of utility bills on the rent invoice. Now we need to source our products. That's Janet's area of expertise. So Janet found out two vendors for two flavored soaps, Berry's Craft and Aromaland. Berry's Craft will provide lavender flavored soaps, and Aromaland will provide spring breeze flavored soaps. Soaps will be purchased in boxes of 100 pieces. The price of each bar of soap is 10 USD. The price is static for both from both the vendors. As Janet will be sourcing products and David will be finding ways to sell them, and they will both manage the business operations, we need to pay them salary. And the partners decided they will be drawing in 25,000 each per month as salary. Selling prices is decided to be 15 USD per soap. An order catalog will be managed by the partners, and out of that order catalog, bookkeeper will generate sales invoices from QuickBooks. Now that we have learned about the business, let's start the bookkeeping process in QuickBooks Online. The first step is setting up our chart of accounts. I have prepared this chart of account by analyzing the business overview and adding in QuickBooks. Let me show you how I did that. Let's go to QuickBooks, select where icon and import data. From the drop-down list, let's select chart of accounts. We have two functions here, spreadsheet sync feature or upload a file. I will demonstrate the spreadsheet sync feature later on. For now, let's choose upload a file. Upload. We have two ways to upload, from Excel, from Google Sheet. Let's try Excel first. Download the sample file. That will give us the standard format. Open the file. We don't need these data. We're not using account coding for this example, but we can always use that. So let's go to our G sheet, copy our original chart of account, paste it here. Make sure to do well paste. Let's clean up the remaining cells. and good. It's saved. Cancel it out. Go to QuickBooks again. Browse the file. Next, sync the fields with CSV file. So detail type is detail type, account name is account name, and type is type. Let's go next. Here QuickBooks gives us a preview of what it got from the CSV file. Everything seems all good to go. Let's import. But first, let's check out the Google Sheet sync feature as well. So cancel it out, leave without saving. Again, use file upload. Now we need to connect a G Sheet to import the chart account. Which one? We will connect this one. So let's try connect, log into our Google account. It will take us to our Google Drive, locate the file we need to connect, search, we got it, select. Now we have the data in chart of account tab. So we need to select that tab as well. Next. Again, sync your fields. Next. Review your fields. Next. Check the preview. All seems good. Then import. As we have already added it in QuickBooks, let's go to our chart of accounts in QuickBooks. We will find it in Transaction Center, chart of accounts. Here's our chart of account imported. Let's add our vendors and customers, and there are multiple ways to do that as well. First, let's see our import data function again. So go to gear icon, import data, select vendor or customers. They both basically gives us the same options. If I select customers and import, we get these two features. If I select vendors, we'll also get these two features. We have already covered the upload file feature. Now let's try spreadsheet sync feature. Next, next, let's go. Open Excel. So what this feature does is connects a Excel file to QuickBooks. And see the add-in here at the very top. We need to sign in into our QuickBooks account from this Excel file. So let's get started. Select our QuickBooks accounts and log in. Although we can see four options, there are basically three options. So run report, we can run single company report or multiple company reports. Records, we can add and create new records, and we can create and sync budgets. What we want to do is create and edit records. Again, we have two options, add or edit. Select a template. First, we want to add vendor and customers. Select that. Now we need a template. Do we want to add new records or do we want to edit our QuickBook records and sync back? Let's try the first one. Let's click the template. General instruction on how to use this function. Here we can see our headings. There are some of the columns have data validation and starred ones are mandatory. As this is an example, so we will only be filling out the mandatory fields. So post, do we want to post this? Yes, we want to post this. Notice this one has data validation, either yes or no. So let's put yes. What are we adding? List type. So we are adding vendors and display name. So what is the name of our vendors? Let's go to our key sheet. These are our vendors. And the very first thing we purchased for this business is QuickBooks subscription. So Intuit QuickBooks was our very first vendor. Let's go to the Excel file once again. Display name is then Intuit QuickBooks. Now, if we have real data, we can put in these cells. But as we are doing example, we will just keep to the mandatory fields. Now here comes the magic. Sync with QuickBooks. Yes, I want to sync. We got an error. It says we already have this vendor in our QuickBooks. Now, let's try sync again. We're getting the same error message. Let's go to our QuickBooks and see what we have. Expenses, then vendors. So all the vendors are, I have already added all the vendors in QuickBooks already. So that's why Intuit QuickBooks is already here, and when I'm trying to add that same vendor again, it gives us an error message. So let's go to our let's go to our Excel file again. Now let's try to pull in all the data we have in QuickBooks. Let's select create and edit records and select template. We already tried the first one. Now we want to edit QuickBook records and see that get records. When we're changing the templates, the previous template will get reset. So let's get record. Another template will be available to us. Now we have all the data we have in QuickBooks here. Notice it says no. Why does it say no? Because these data are already in QuickBooks, so no need to add them back. If we want to change this, then we can select yes from here. Notice we have also archive option. If we want to archive this vendor, we can do this from here as well. But for now, we want to post it again. So our display name is James Brown and he is one of our customers. So let's try changing that. Let's say this is not James Brown, it's Gordon Brown. So we are adding Gordon, then well, again change first name to Gordon and this one stays Brown. And now we have only one with yes, but all of them are no. Yes, we can always change it to yes. If we sync, then it will not make any changes and give us an error message. So let's sync to QuickBooks, sync, sync complete. Now let's go to QuickBook and see what happened to our James Brown. Let's go to sales and customers. Notice there is no James Brown here, only Gordon Brown is here. Now let's try to sync back to James Brown. Select Gordon and make it James. In here and in here. And put in yes. Sync the QuickBooks. Sync. Sync complete. Let's reload. And Gordon Brown is now James Brown again. Anyway, what we want to add, let's say Costco. We filled in the mandatory fields. If we sync the QuickBooks, it will sync right up. Let's go to vendors. Here is our new vendor, Costco. Let's also try archiving this one. So we want to archive this. Go to QuickBooks, save, reload, no more cost. Let's see if we can pull in the archive files. Here, we can see Costco, we can see. So now the import function is done. Let's see how else. Now the import function is done. Let's find out other ways to add customers and vendors. So notice that in vendor center we have new vendor. If I click on that, I see a new vendor enlistment page. We can add all different types of data, what's their currency, company name, display name, and other stuff, address, payment information, additional information for taxing, and many more. So this field will only add one vendor at a single time. Plus, we can see the drop down, we can see import vendor. That brings us again to the import page. If we select multiple vendors, it gives us a spreadsheet-like table where we can add multiple vendors at the go. Name, company, only one mandatory field here, Costco. Let's say Bath and Heaven. Sorry, let's say Bath and Haven is one of our vendors. And if I save this, these two vendors will be created. So I don't want to add any more vendors, so I will leave it. The same feature is available in customer section as well. Let's go to our sales, then customers. You can see new customer, import customer, and multiple items. So these are the ways we can add new vendors or customers. Our client is a trading company. They buy soaps from the vendors and sell them to their customers. Naturally, we need to track our inventory and set up our production service. Let's see how we can do that. Let's go to sales first and select product and services. We can add them one by one from this new button, or we can add multiple from import button. From import function, we can import them from Excel file or from Google Sheet that we have looked at earlier. Now we get two items here by default in QuickBooks, hours and services. And I have already created our two product lineups, JD Lavender Bar and JD Spring Bar. Let me tell you how I did that and explain their mapping. Let's click on New button. We have four options: inventory, non-inventory, service, and bundle. Inventory is a product or service that we buy and sell, and we want to track their quantities. Non-inventory if we don't want to track their quantities as inventory, but we still buy and sell them. So we are not selling any services or bundles from now, and we do want to track our inventory. So let's choose inventory. First, let's add our product's name. JD Lavender. Assign an SKU. L for lavender. For our first product, so 001. Then we can add logo, picture of the product. We're not doing it for now. Let's choose category. We have only one category, handmade soap. We can also add new categories from here. Let's select our only category, handmade soap. Initial quantity at hand. This field allows us to put in opening inventory balance. At the start of our business, which is we had no inventory at our hand, so our opening balance is 0. When did we start our business? 1st October 2024. Reorder point. Now we buy our soaps in bulk quantity. Every box contains 100 bars of soap. So whenever our inventory comes to 90, we want to reorder another box. Here we need to choose our inventory asset account. This is the GL where cost value of our inventory at hand will be recognized as an asset and show in our balance sheet. So we are adding JD Lavender Bar. So let's use JD Lavender Bar as an inventory asset. Description, we're not adding any. We can add specific product description here. If we have determined a selling price of our product, we can put it here so that every time we choose this product in an invoice, price will automatically come in that invoice. We also have the option to change price in an invoice without changing it here. We know from client overview that selling price of each bar of soap is 15 USD. Now we need to add an income account. Every time we sell this product, revenue or income from that sale will be recognized here in this GL and will show in our profit and loss statement. So as we are adding very lavender bars, let's select that account. Purchasing information, if we have any specific purchasing information, we can put it here in detail. Add purchasing cost, which is 10. Purchasing information, if we have any specific purchasing information, we can put that in here. Let's put in our costing per product and expense account, lavender bars. Now save and close. Preferred vendor, we buy lavender flavored soap from Barista. Then save and close. As we have already created this one, let's go to that one. We can select edit, that will pull in our information. Here, name of the product is here, SKU is here, handmade soap, water quantity 0. This is our asset account, selling price, sale of product with lavender bar, cost, cost of goods sold, and we purchase it from Bankstar. Now, what is the mechanism of this mapping? When inventory is purchased, QuickBook will take number of units purchased from the vendor bill, multiply that with per unit purchase cost, and use the resulting number to increase inventory asset and increase liability to that vendor. When a sales is made, QuickBook will pull the number of units from customer's invoice, multiply it by cost, and use the resulting number to decrease the inventory and increase cost of sales expense. So far, we have been working on setting up our QuickBooks account. We imported our chart of accounts, added vendor and customers, and established our product mapping. Now it's time to start using those and record our income and expenses. There are a bunch of ways to do that. We can add them one by one from our bill section and add bill, or for invoices, create invoices. For bulk upload, we have already seen CSV Upload, Google Sheet Connect, Spreadsheet Sync Connect, and many more. Now let's look into a different way, that is QuickBook Batch Transaction. Let's go to our import data from gear icon, select bills. Bills and invoiced upload template are the same. So let's try bills first. Import. Select QuickBooks Batch Transactions. Next. This is our template. Now let's add our bills. These are all our bills for the month of October. The first transaction of our client was purchasing QuickBook Online subscription for 6 months. Now, we need to understand something here. We bought a subscription for 6 months and paid upfront. That means we paid in advance and we must distribute the expenses over its subscription period. Our bill says charge per month is 33.33 cents. Therefore, current month's charge will be our expense and the rest of the amount will be booked as prepaid expense, which will sit in our balance sheet as an asset. Let's go to our batch transaction page to record that. So here we are. Bill number is QB001. Our vendor is QuickBook. Bill date is 1st of October. Due date is also 1st of October. Our terms is due on receipt. Now we need to decide whether we want to book this entry in a GL or we want to add it as our inventory. To book it as in a GL, we will choose category details. To add it in our product and service, i.e. our inventory, we will select item details. We want to book this in two GLs actually. So let's select category details first, then category column. We will put in our expense GL first. Our software subscription, select that. Let's put in our description. Our description is QuickBooks subscription charge of October 2024. Paste that. Notice we have an additional line added here. Let's delete that. Amount. Let's see. We can we can we know from our invoice that 1 month's charge is 33.33, but we can also do calculations here. So 200 is our total invoice value divided by 6. So 1 month's charge will be added here. Copy our description into our memo. Total column is 33.33. Now we need to add another line. So notice there is a plus sign in our category column. Click that. A new line will be created under this entry. Now let's select our category. We want to book it in our prepaid expense here. A slight change will be there for our description. Copy the previous one, paste it here. QuickBooks subscription charge from November 2024 to March 2025. We will do calculations here again. We want to add 5 months charge here. So 200, our total invoice value divided by 6 into 5 brings us to and 166.66. No need to add memo here. And let's check our invoice total with this total. So our invoice total is 200. And now let's save this. Nicely done. We created one bill. Now let's go to that bill from our bill section. Let's reload this. In unpaid section, we have one bill for our vendor QuickBooks Online. Let's open that bill. Vendor is right, Q1 receipt, everything is in order. We have this in our two GLs. Now we have 166.67 in our prepaid expense as an asset, and we need to charge this every month from November 2024 to March 2025, pulling out from prepaid expense and charge it in software subscription expense. We can automate the whole process through recurring journal entry. Let's see how to do that. Go to transactions, select recurring transactions, new. What we want to post? We want to post a journal entry. So find journal entry from here. Okay, let's add in our template name. So this is prepaid adjustment for QuickBooks. This is scheduled. No need to create in advance. We want this to be posted every month on the last day, as we have already charged current month's expense. This will start from the first day of next month, which is November 1st, and it will end by March last day 2025. Now what will be the journal? We need to charge expense. So software subscription will be debited by every month's charge, which is 200 divided by 6. Description, QBO, subscription charge. Name, we will add our vendor. So we select QuickBook Online. Now credit will be prepaid expense. By what amount? The same amount. Memo will be the same. Vendor will be the same as well. Now we need to save the template. We can see that QuickBook will post a journal entry on 30th November based on this template automatically. Done and dusted. We don't need to bother about our monthly prepaid adjustment every month. If we ever encounter any other prepaid expenses in future, we will manage them the same way and forget about it. Now back to our bills. Second expense of our client was purchase of two laptops from Computer City. So here's our Computer City bill. We can see two MacBook, their serial numbers, total amount is 2000 USD, and the partners of the company decided that the useful life of these laptops will be 3 years. Let's go to our QuickBook batch transaction tab again and record the bill. So here's our tab. Okay, select again. Okay, let's go to our bill again, add in the data. So it's on October 5, bill number is CC003, CC003, vendor is Computer City. Let's remove the terms. Let's add in the bill date, which is October 5. Due date is October 15th. Yes, due date is October 15th. Category details, that is correct. We want to book this in a GL. It will be an asset under our fixed asset GL IT equipment and tools. Description, let's copy the description from our invoice. Let's go to our invoice again. We bought it for 2000. Memo, let's copy the description again from here and paste it in our menu section. All good to go. Go to our bill section again. We purchased our products, which is herbal scented soaps, from our two vendors. Let's add in those invoices as well. First, we have Paris Scrub. We made our first purchase on October 3, or we can split the window here so you guys can see as well. This is our invoice window. Let's resize a bit. Put a bit smaller. We don't need this line. Let's delete that. It is clean. Bill number is BC10 BC101. It's correct. Paris Craft is our vendor. October 3 is our bill date, and payment date is 10th. We don't need any terms here. Now, this one is our inventory item purchase. So we will choose item details here. Notice the category details fields have become disabled. We can't edit it. And item details fields have been enabled. What we have purchased? We have purchased lavender flower soap. We have already created a GL for that. Description is, let's copy it from here and try to paste it here. Yes, happened. Quantity, how much did we purchase? We purchased 100 bars. Total is 1000. When we have created these item details, we already specified our purchase price, and that is where this rate is coming from and the amount is being calculated. So all good to go. This All good to go. So all good to go. Just need to copy the description and add in our memo. So another bill is added there already. Let's go to our next bill. This one is Paris Craft again. So we can see from this invoice and the previous invoice, both the invoices contents are pretty much the same. Our memo is the same, our amount is the same, and the changes are in dates and in invoice numbers. So what we can do to make the data entry process efficient, we can duplicate this bill. So bill is duplicated. Now we need to make necessary changes. So this one is BC102. Yeah, okay. The bill date is definitely not 3rd of October. Bill date is 10th of October and due date is 17th of October. Item details is correct. We purchased lavender flavors bar. That is correct. Description is correct. Quantity 100. Rate 10. Total 1000. And memo is also correct. Similarly, we can add another invoice that we have from Beariscraft. This is also similar, just a change in invoice number and change in invoice dates and due dates. So let's duplicate this one again. Change the bill date. It will be 103. These are correct. Bill date is 17th. Due date is October 24. Details and other stuff are correct. We have added three bills from Beariscraft. Now let's see what else we have. We have three bills from Aromaland as well. Let's start from the first one. This is 101. Resize it a bit. Now we can duplicate this one and add in the details. So this will be 101, but in front we have AL. Our vendor is Aromaland. That's correct. We don't need net 30. We will input it manually. 3rd October and 10th of October. This is correct. Now we have got Spring Breeze flavor soap from this vendor. So we will delete that and select this one. We will paste the description here. Quantity is 100. Rate is the same. Good to go. Then we have two more wheels. Let's open them together. This is 102. Where is the other one? 102. So let's just close some of this. This is 101. This is 102. Sorry, this one is 103. And this is 102. Right. So all are fairly the same, just a change in bill number and invoice dates. So let's duplicate this. Okay. Two, all three of them are from Aromaland. Second one, 102's date is 10th of October. And then we have 70. The last one is dated 17th of October and due 24th of October. These are all the same. So our inventory purchase bills are done. Computer City is done. QuickBooks Online is done. Now we have Howard Baker invoice. This one is our diagram. So again, let's put in the invoice number, copy that, come in here, paste it, select vendor. Notice there's two items in this invoice, rent and utilities. It will go to two different GLs. So category details one will be rent expense, description. Let's copy from here, paste it here. Amount is 300. Total is 3. Now we need to add another line. This will be our utilities. We'll go to our utility expense GL, copy the description and paste it here. Amount is 50. Memo. The first one is our rent, and the second line is our utility expenses. Bill amount total is 350. We have one last invoice from our bookkeeper who is Mamunur Rashid. Let's add that. Copy the copy the bill number, paste it here, add the vendor, bill date is 30, also due on 30. This is not item details. This will be category details. And this one is our bookkeeping service. So this is professional services. Here we have professional fees. Notice professional fees is a sub account of consulting expenses. Write in the description, bookkeeping service for the month of October 2020. And it is 300. Okay, we have added everything here. Let's delete this duplicate line, delete bill, and all good to go. Let's save. Nicely done. We have added 9 bills. Let's go to our bill section again. From expenses to bills. All our bills are unpaid and all our bills are here. Now let's add our sales invoices into QuickBooks. If we go back to our client overview, it was said that a order catalog will be managed by the partners. Janet Baker and David Hudson has put together an order catalog for the month of October 2024. We have total 7 invoices. Some of them are multi-line, some of them are single line. Now we need to add these invoices into QuickBooks, and we will be using CSV upload methodology for this one. So let's go to our QuickBook and gear icon. From that, import data. Invoices are already selected. Select import. We will upload a file. Select upload. Now we need the format to do that. So download a sample CSV. So we get the format from QuickBook. Save it. Open the file. Here is the file. Let's delete all the dummy data from here. Resize the column and see what headings we have. We have invoice number, customer name, invoice date, due date, terms, location, memo, item, product and service, item description, quantity, rate, item amount, currency, and service date. We have to have an input in the start ones as they are mandatory. Let's pull order catalog and the CSV side by side. This one is here and this one is here. So we don't have terms in our order catalog. So let's delete that. We don't have location tracking. Delete that. We have memo definitely. And we're not selling any services. So service date is not relevant for us. Let's delete that. Now that it's clean, let's add our order catalog data into our. So we are using order number and converting them to invoice number. So let's copy all the order numbers here and paste it in invoice number. Next we have customer names. Copy that, paste, sure to do value paste. Order date and due date becomes invoice date and due date. Memo and item will be adding in later. Description, copy and paste. Item quantity, these are our quantities. Okay, item rate is always 15 for now. Good to go. Total amount. For this, we will be using a formula. So item quantity multiplied by item rate and paste down the formula. USD is always our currency. And USD is now memo. So for every invoice, we have only one memo box and that consists only. So let's compile our description column into one line here using a formula which is concatenate. Select first one of our item description, comma, add in a space, then second line. Now we have our memo. Okay, so invoice number 1001. This is a continuous line, so we don't need to add memo here. Next, invoice number 1002 is it's a single lined one, so add in a formula which is equal to memo is the same as description. 1003, same. Let's check the formula if all of them are correct. Yes. Single lined invoice. Yes, this is correct. Yes, this is correct. And then we have another double line. Copy the formula, paste it here. Check formula. Yes, it's check formula and this is correct. Again, we have single lined invoice. So copy formula for single lined ones. And then we have consecutive two double lined invoices. Copy the formula and paste. Check the formula again. Yes, they're getting correct input. Also getting correct input. Now item, which is product and services. So let's go to our QuickBooks, cross this one, make it bigger. From sales, go to products and services. This is our items. So edit this one. In order to add data through CSV, we can't just simply add in the product or item name. We need to add in the category as well. Let's see here we have a category which is called handmade soap. So we need to copy that and paste it here. Use a colon and then add in our product name. There you go. So lavender bar. So let's copy and paste all the lines where we have sold lavender bars. So this one again to here. Let's check if they're right. Now we do the spring bar. Let's copy this one and paste it here, edit it, and simply write spring breeze and copy and paste it in the blank section. Our CSV file is ready. Let's give it one last look. Yes, this is good to go. Save it, cross it, come to QuickBook, cross it out, go to input data again, invoices, upload, select the file. We can add new customer along with new invoices by toggling on this option, but we don't have that for now. So next, check in all the fields if the alignment is correct. So invoice number is invoice number, customer is good, invoice date. We need to check the date section as well for the format. So open the CSV file again. What format have we used? We used month, date, year format separated by a dash. So this one is correct. Due date is also good to go. Okay, everything seems in order. Next, 7 invoices will be imported. Complete import. Let QuickBook do its thing. Everything is done. Go to invoices and we have our 7 invoices added in QuickBooks. Now let's add our bank statement. So again, we will import our bank statement through CSV. So let's go our input data, bank data, import. We can do select files or we can connect bank. For now, we will be selecting our files. So let me give you a quick look at our bank statement. So this is our bank statement. We need to upload it through a CSV file. So first we need to prepare a CSV file. Let's open Excel, blank workbook, copy our bank statement, paste it here. Make sure you do value paste. See if everything is all good. We need to save it as CSV. So select save as. Let's use our downloads folder and format will be CSV. Save. Now let's go to QuickBook. Select files. Select the file we just saved. Continue. Select which bank account this statement belongs to. This one is ABC Bank. This is QuickBook. This is our CSV file. So is the first row in your file a header? Yes, that is a header. How many columns show amounts? Only one column shows up amount. What is the date format used in your file? We are using month, date, year separated by a dash. So the first one, let's match our headers with QuickBook fields. Date is where, date is transaction date. Description is where in our memo column. Amount is in our amount column. Check number we don't have, so we're not using that. Let's do continue. QuickBook will show us a preview that this is what you are importing. Let's have a quick look. Dates are fine, inflows are inflow, and outflows are outflow. All good. Select all. We have a few options. Keep original values or reverse all values. Reverse all values will be useful when you are importing a statement from your credit cards. There, every expenses we made from the credit card shows up as a positive figure and the credit card payment we have made shows up as a negative figure. So when we import that CSV file here, expenses or money out transactions will be positive and money in transactions will be negative. What we want is reverse of that. So if we select reverse, positive becomes negative, negative becomes positive. But for now, this is our bank statement. We need positive as our positive. If we unselect any transaction here, that transaction will be not be imported. Then we have the option to select which transaction I want to import. Let's say we don't want this transaction to be imported in our QuickBooks. If I deselect this, then select continue, this particular transaction will not be imported in QuickBooks. Okay, let's see. Okay, let's start again. We need all the transactions here. So continue. Cookbook will import 27 transaction. Let's do a quick confirmation with our main file. We have 27 transactions. So all good to go. Yes, we want to import now. Import complete. This is done. This brings us to our bank transaction field. So first thing I see here is this one is sorted by description. I don't want that. I want it sorted by date. If I click on the date, it is now sorted on date wise. So first thing we have two fund transfer from our two partners. 5,000 from Janet Baker and 10,000 from David Hudson. If we go back to our original client overview, which is this one, Janet Baker deposited 5,000 and David Baker deposited 10,000. So these are our capital investment. So let's create a transaction for this. What type of transaction are these? This is a deposit transaction. Who are the vendor or pay? Basically, no vendor or customer made this transaction. Our employees made this contribution to the company as capital investment. So we will add new. We will add them as our employees, as they are also our salaried employees. So first name is, last name is Baker. Hire date is 1st of October. Save. Now, this is how we create a vendor, a customer, a employee on the fly. Let's select account. What are these? These are capital injection. So let's see if we have anything like that. Yes, we have a equity GL that is called capital injection by Janet Baker. We have another similar one for David Hudson as well. This is Janet's transaction. So let's select Janet Baker. This transaction is not associated with any product or service, i.e. inventory item. So all good to go. Let's add this. Again, we have a similar transaction, but this one is with Mr. David Hudson. What is this? A deposit. Who is our pay? We need to add new. This is our employee. His name is David. Last name is Hudson. And we have hired him since 1st of October. Save. David Hudson comes in automatically. Search capital. Capital injection by David Hudson. This is our equity, not associated with an inventory, and done. But notice there are a few repetitive transactions. What are these? These are bank charges. So every time we made a payment, we incurred a bank charge. As bank charges will be common transaction that will happen throughout our banking activities, let's create a rule to automatically categorize this transaction quickly. So bank charge, what we need to do here? We need to categorize them as an expense transaction. To whom did we pay this money? We paid this money to our bank. So our payee is our bank, ABC Bank. And what type of transaction is this? This is an expense transaction. What is this? This is bank charge. So let's select bank charge. Now notice we have few options here. We can add an attachments, we can create a rule, exclude this transaction, or go to transaction history. We can add an attachment, a receipt, or any attachment with this transaction. We can create a rule for this transaction. We can exclude this. If we exclude this, this line item in our bank sheet will be deleted. And categorization history, This one will show us nothing now as this one is the first transaction of its kind. But whenever we go for categorizing the second transaction, it will show us in which GL we have booked this type of transactions previously. But we are interested in creating a rule. So let's select create rules. What is the name of this rule? This rule's name is bank check. This is a money out transaction and this is applicable to all of our bank accounts. We can, if we had multiple accounts, we have the option to choose between which bank account these rules applies to. For now, we select all bank accounts. This is the part where we test the logic of this rule. Our logic is if bank text contains the words bank charge, then we want to apply this rule. Once the logic is satisfied, what will QuickBooks do? It will record a expense transaction. Category will be bank charge, so it will book it in our bank charge GL. It will not associate this with any inventory. Payee will be ABC Bank. We can add tag here as well. We can replace the bank memo with anything we like to add here, or we can keep both. If we tick mark this one, the original bank text will be there and our selected memo will be there. Let's save this one. Save. Once the rule is saved, you can now see, let's sort it in description wise again. You can see all the bank charges are saying they have a matching rule and this rule is correct. Pay is ABC Bank, account is bank charge, no association with our inventory items, memo is bank charge. Let's let's categorize all these transactions in one go. Select all the transaction that says bank charge and simply accept. Done. Now let's see what we have next. We have an inward payment from James Brown and QuickBook is saying that it has found a match. So what did we receive? We received 225 USD from James Brown. Let's go to our sales. So James Brown has sent us $225. Let's see if we have any invoice for that. Yes, our first invoice 1001 was for $225. So this is a payment of that invoice. Select match, go to our customer center, reload. We can see here this. We can see here that this invoice is now paid and we have a payment journal that says close. Let's go to our payment journal. This is our journal. Let's see. Let's click edit and here it says one online bank matches. So in bank transaction page for review under for review section we have the bank transaction that we haven't yet categorized. In categorized section we can find all that we have already categorized and we can see that we have categorized James Brown's payment. Now let's go to our for review section again. We have another payment collection from our customer Karuna and QuickBook has found a match 1002. Does it matches with our order sheet? Let's pull it side by side. This is our order catalog. Yeah, 1002 is for 750. Let's go and 1002 is a match. Again, inward payment from Linda for $450. Let's see our match. It says invoice 1003. Let's open it in a new tab. Yes, this one is correct. Linda does owe us $450 and she has paid it. So this is a correct match. Next we have a payment transaction to Aroma and we found six matches. What is the transaction? We have made a payment of 1000 USD to Aromaland. Let's go to our bills. And Aromaland first bill was 1001 and this bill was due on 10th of October. So it is highly likely that we made this payment on the due date to Aromaland. Let's see what matches QuickBook has found for us. So first one is bill 101 that has an open balance for Aromaland. So this match is correct. So let's match this one. Next, we found another transaction of $1,000 to Aromaland. But the QuickBook is saying that the pay is very scruff. Definitely that is wrong. So what we do, we see the matches and find Aromaland invoice 1002 is our highly likely payment amount for this one. So let's check it. Yes, this one is correct. So now we need to add this. Let's match it with Aromaland bill number 1002. Another payment to Aromaland for $1,000 and we have only one invoice open from Aromaland, so it is this one. So let's match this one. Now we have three payment to Barry's Craft and three matches found. Let's see. We have three open invoices of Barry's Craft. So this one is paid on 10th. Let's see which one was due on 10th. Go to our bills again. 101 was due on 10th. So this is a payment of 101 match. So this is a payment of 101 match. Payment of 102 match. Payment of 103. Yes, this one is right. Payment of 103 match. Now online fund transfer to Computer City. We did bought two computers from Computer City. Let's pull in the bill. This is our Computer City bill. It was due on 15th of October and on 15th of October we did pay to Computer City. So it is a payment of bill number CC003. On 30th October we paid Howard Baker for our rent and our utility. Let's see our bills again. Howard Baker's bill 350 and it was due on 30th October. So this is a correct match. We paid our bookkeeper $300. This is the bill. Open a new tab. This one is right. It was due on 30th. So we paid this one. And now we see another transaction here. Bank details says online debit card payment to Intuit QuickBooks and it has found a match of payment of this bill from QuickBooks. Open that bill. This one is a This one is a bill from QuickBook for $200 and it was due on 1st of October and we have paid QuickBooks the same amount, so this is a correct match. Now lastly we have salary payment. Let's record our payroll now. First we will recognize the payroll expense and prepare a payroll liability by recording a journal entry. Go to new, select journal entry. Date is 25th of October. Journal entry number 1. Account is salary expense. debit 2500, description, salary of Janet Baker, name Janet Baker. Again, salary, this is an expense account, debit 2500, salary of not Janet Baker, this is salary of David Hudson, again David Hudson. Now we will create our liability. So accrued payroll liability 5000, credit salary expense for the month of October 24, name will be blank. So this is our salary expense journal with recognized liability. Let's make this recurring from 1st November every month of 25th, template name payroll journal. This is scheduled monthly day 25th of every 1 month. This will be our template. So if I save this template, this says the recurring start date can't be before today. So today is 4th of November. So we can't make this for November. We need to make this for December. So we are doing October's payroll journal now, and for November's payroll journal, we need to do this manually. But from December, this journal will be posted automatically. So save template. This is saved. Now we will settle our payroll liability with another journal. So go to new journal entry again. Let it load fully. Date is 25th of October. Journal entry number 2. We credited our accrued payroll liability. Now we will debit that by 5000. Salary expense for the month of October 24. Name will be blank, and ABC Bank 5000 will be credited. Salary for the month of October. Again, we can make this recurring payroll payment scheduled monthly on day 25th of every month. It will start from December 1st and will never end until the company closes down. Save template, recurring journal entry saved. Let's go to our recurring journals again. Transactions, recurring transactions. If there are any changes in payroll structure, say we hired a new employee or some of our existing employee resigned, changes in payroll amount, it could be an appraisal, it could be a personal expense deduction or any other deductions, we will revisit these two journals and stop these recurring journals from this panel. We can delete it, skip next date, pause it. When our payroll structure changes, we will delete these two and make a new one. Alternatively, we can do another thing, that if our payroll structure changes rapidly, we can make this unscheduled. That way, it will stay here as a template and we can use it anytime. If we click use, the journal template will come up. We just need to change any data that requires changing and save and close. The journal will be saved. Now, let's go to our reports. Go to profit and loss. Let's see if our payroll expense has been recognized or not. So in October 2024, we see our payroll journal is not recorded. So let's go to our recurring transactions again and use these two. Let's make it unscheduled again. Save template, proceed, reload the page. You can see these two are unscheduled now. So let's use our payroll journal first. Our date and other description amount is correct for this month. Let's choose save and close. Journal entry 4 is saved. Again, let's use this one. This is correct. Save and close. Journal entry 5 is saved. You can see the journal entries here, and we can see all our journal entries from this menu. So view more. We can see we have only 2 journals so far. Let's go back to our report section. Profit and loss. Now we can see that our salary is here. Let's click on it, see what we have here. You can see one journal entry, that is number 4. We can see salary of Janet Baker, salary of David Hudson is recorded here. Let's go to our balance sheet again. Here we can see accrued payroll liability is 0. Click on it. We can see the 2 journals impact in detail. So here we had 5,000 plus and minus. Here we recognize the liability, and here we nullified the liability. So all our salary liability is settled. Now that we have cleared this thing, we have created payroll expense, created payroll liability, and settled that liability. While settling that liability, we created a payment transaction from our bank. So now let's see if we have this transaction in our bank. Go to our bank transactions. We have this transaction in our bank, and QuickBooks says it found a match with journal entry 5. So this makes sense. So let's match it. All our bank transactions are now recorded. So all our bank transactions are categorized. Now we need to reconcile our bank accounts. So click reconcile, select the bank account we want to reconcile, and beginning balance is 0 as this is the first month we are operating the bank, and our closing balance is, let's go to our bank accounts CSV file, and so this is the first transaction. So after this transaction the balance will be this one, and the rest will be added with our bank balance. So let's add in the formula and paste all the way to the down, and we have our closing balance, that is 2520 positive. Add that at the ending date, which is 31st October. Start reconciling. Let's see here what we have. It says our difference is 0, but let's check again. Our beginning balance is 0, that is correct. Our statement ending balance is 2520, that is also correct. We have made payments worth 13,905. Let's go to our Excel file, create a simple filtering and check if that is correct. So we need all the fee amounts that is less than 0, so all the negative numbers, and sum it up together. It says 13,905. This one matches, that is correct. Also, we need to check our money ins, so greater than 0 is our positive figures. Total is 16,425. This is the amount of money we have received in this month. At this part, this one in now down below, let's select all our transaction together. Yes, select all. After selecting all the transaction, if there is no difference, then finish now. Your account is reconciled. Done. Time for a recap of what we have done so far. We prepared our chart of accounts in QuickBooks, added our vendors, customers, employees, recorded our bills and invoices, imported bank statement and categorized bank transactions, and reconciled our bank account. We are nearly at the end of our bookkeeping process for October 2024, and the last thing we need to look at is fixed asset depreciation. JD Handmade Essential purchased two assets so far, two laptops on 5th October, and they booked it in IT equipment and tools. Let's go there. Bills. We bought it from Computer City. As this is paid, this will not be under for review or unpaid. It will be under paid. So this is our computer bill. Let's open the bill. This is booked in IT equipment and tools. We see what we have purchased: two MacBook Air. We have the serial numbers. One will be used by Janet Baker and another one will be used by David Hudson. As per IFRS 16 property, plant and equipment, there is no depreciation charge in the month on which an asset was purchased. Therefore, no depreciation charge for these two laptops in October 2024. However, we will look into the ways in which we can automate the depreciation charge process in QuickBooks. We can do this in two ways. One, through our recurring journal process already that we have already saw in our prepaid amortization. This is the one. We can replicate it and alter the GLs to use it as a fixed asset depreciation recurring journal entry. But as we have already familiar with this one, let's try fixed asset module. We can go there by advanced accounting, then fixed assets. We can also add multiple assets together. Let's add one by one. So first thing is our asset name. So what is the name of our asset? It is a MacBook Air, and asset code will be, since this is a laptop, let's assume it's LP, and this is our first laptop, so 001. This is our asset code. In description, let's add serial number of the asset. We can find that from our invoice. Let's select the first one, copy, paste it here, and add the user. So the first laptop will be used by Janet Baker. Definitely, this is a non-depreciable asset. But if we click that, what happens? But if we click that, what happens? Purchase price, we can put it in. Purchase date, we can put in. But depreciation start date is now no longer editable. Method is locked. So basically, if this asset is not depreciable, we can just simply add it as an asset and it will stay here as long as this is in our ownership. So let's toggle that off. So purchase price, what is our purchase price? $1,000 per laptop. Purchase date is 5th of October. Depreciation start date, no depreciation in October, so it will start from 1st of November. Depreciation method will be straight line. Useful life 3 years. Salvage amount is 0. Asset account. Now, let me tell you the mechanism of depreciation. Depreciation of an asset means we will distribute the cost of an asset over its useful life in number of months, and the resulting amount will be used to reduce asset from balance sheet and charge expense in profit and loss. The cost value of an asset is their purchase price, and that goes to asset account. For our account, for our case, it is IT equipment and tools GL, and our purchase price is $1,000. So we have our asset account here that will be IT equipment and tools. The value of this GL will never change. Now, then how will we reduce our asset from balance sheet? This is where accumulated depreciation, another fixed asset GL, comes into play. Journal of a depreciation charge is depreciation expense debit, and an asset offsetting negative entry will be accumulated in accumulated depreciation GL. In balance sheet, we will see asset account positive with cost value and accumulated depreciation account with a negative entry. And the sum of these two amounts will be our total fixed asset in balance sheet. So let's choose our accumulated depreciation account from here and our depreciation expense account. Our mapping is now ready. We can save this. Since two of our asset is same value and starting our depreciation at same day, we can duplicate this. Remove copy of. This will be laptop 02. This will be used by David Hudson. Rest, rest of the mapping is same. If we save this, now we can see year-wise depreciation amount and their journeys. Here on November 30th, asset value will be 1000, depreciation will be posted 27.78 USD, and remaining value of this asset will be 972.22, and the list goes on. It will end on October 31st. The balance will be 0. This is our fixed asset module. Journals will be pouring in from November 30th. Now let's look at our reports. We have some standard reports here, and we can create custom reports. We have management reports, and we have a tab for spreadsheet sync. Let's go to our standard reports. Two favorite reports are profit and loss balance sheet and accounts receivable aging summary. Let's go to profit and loss. So JD Handmade Essentials, Profit and Loss, October 2024. From our profit and loss, we can see we have made a revenue of 3750 out of selling lavender bars and a revenue of 3525 by selling spring breeze bar. So our total sale of product income becomes 7275. Cost of goods sold. If you can remember, we bought 3000 lavender bars and 3000 spring breeze bars, but we haven't sold all of them. The sold products costs are here. Let's validate this amount to our order sheet. Let's go to our order catalog here. Here we can see all the products we have sold. So we have sold lavender bars in total. How many bars? Let's filter it out. So we have sold in total 250 lavender bars. So if we multiply it by their cost price, which is 10, our costing of the sold goods is 2500. Similarly, if we filter out spring breeze bars, total quantity sold is 235. Once again, equal to 235 into 10 per bar is 2350. Total 4850. Does that match with our P&L? Yes, perfectly does. So this is our cost of goods sold. After that, we derive into our gross profit. We have our bank charges 55. We have professional fees, which is bookkeeping fees 300. Salary 5000. Software subscription expense, which is QuickBooks fee for October 33.33, and office utilities 50. This one is utility share that Howard Baker invoiced us, and then rent expense coming from the rent bill also sent by Howard Baker. And together that brings us to our net other income, a negative amount which is loss 350, and net loss is 3313.33 in the first month of our business. Now let's go to our balance sheet. This is JD Handmade Essential balance sheet as of October 31st, 2024. We have 2520 USD in our bank account. Our receivable totals is 5850. We have inventory assets worth 500 and 650, 500 of lavender bars and 650 of spring breeze bars. Prepaid expense remaining 166.67, that is the remaining amount to be charged from QuickBooks subscription for 6 months. Fixed asset, we have IT equipment tools. We don't have any depreciation since this is the month these laptops were bought. We settled all our liabilities, so accounts payable is 0. Accrued payroll liability is also 0 as we have paid all our salaries. Then we have equity portion, capital injected by David Hudson 10,000 and from Janet Baker 5,000. Let's go to our client overview. This was our capital injection. And lastly, we have our net loss 3313. Let's go to our report section again and see our accounts receivable aging balance. So this is our aging balance. We have current accounts receivable 1050 from Juan Daura, Karuna 1500, and from Walmart 3000. We have one aged receivable from James Brown. This is one invoice. Invoice number is 1005. Let's go there. Yes, this was due on October 17th, but we never received this payment. So this one is overdue by, as of today, overdue by 20 days almost. So this is our AR summary. Let's go to reports again. We have countless other reports here. Also, we can make our own reports from custom reports. This is the end of the bookkeeping process for JD Handmade Essentials for the month of October 2023. If you like my process, do contact me through Upwork or LinkedIn. Hope to hear from you soon.